Alert! Experts warn that a bigger stock market crash is on the horizon as crisis hits. In recent weeks, the global financial markets have been tumbling at a rate never seen before. Economists are still warning that the markets will drop further if this economic meltdown persists for long. At the moment, the stock market has crashed by about 30%. Experts are warning that we have very high chances that the market will crash beyond everyone's expectations. Everyone out there is saying that the market cannot fall anymore, but most of the legendary investors in the world are still afraid that the market might tank further. All over the world, economies are collapsing because most of the economic activities have been paused as a result of the prevailing threat to public health. Because of this, thousands of companies all over the United States have been forced to close. Without any economic output at all, their share price has plummeted. At the moment, some of the companies have lost half their value. This economic crisis is what has contributed to the collapse of the stock market because basically the entire economy has come to a standstill. Many companies and businesses are laying off millions of workers every week. Because of this, the unemployment numbers have hit record highs. The whole U.S. economy is basically dysfunctional, and as a result, the entire stock market has been tumbling for the last month. Supply chains have been disrupted. This is crippling the entire global economy. This economic disruption is the main contributor to the collapse of the stock markets. This means that the market is more likely to continue collapsing until when the global economy will stabilize. Just like it is in the US, the Eurozone is also going through an economic turmoil because in most countries their economies are still closed. All over the world, economies are in a downturn. The markets will continue tumbling in the near future. As a result of this economic crisis, the entire financial system is shaking. Banks are facing a credit crunch. They're stretched because of financial demands that are increasing exponentially. Liquidity has become a big challenge. The financial system is struggling. The global financial markets are the hardest hit by this crisis. At the moment, every market is troubled. The bond market is plummeting. At the same time, the stock market is plummeting. Investors have nowhere to hide. In this crisis, everyone is losing. Most of the Americans have invested in the stock market. At the moment, their portfolio is down by about 30%. Despite this, the magnitude of the market crash and the economic collapse, we have factors, many factors, that are pointing out this crisis will continue. Most investors are still afraid that the market will continue tumbling down. Some of the legendary investors feel that we have not yet hit the bottom. This economic downturn is being reflected to the stock market based on the extent in which the market has crashed. It's very clear that this economic meltdown is many times bigger than the 2008 global financial crisis. The 2020 crash will become one of the biggest market crashes in history. In just weeks, the market has wiped off gains that have been made for many years. Trillions of dollars have been lost. Experts are warning that the full extent of the economic damage is yet to be reflected in the markets. This means that we might have another downside move in days to come, especially if the economy will not open up. Recently, President Trump extended the lockdown period to the end of April. This means that the U.S. economy will remain closed for at least 3 weeks to come. This means that the market will not recover anytime soon. It will not be a wonder if we see another wave of stock market collapses within the next 2 to 3 weeks. Recently, Goldman Sachs conducted a survey where many institutional investors were involved. Out of all those who were interviewed, 50% of investors believe that the stock market has not yet hit the bottom, and we have room for more downside movement. In this survey, Goldman Sachs interviewed 1,800 investors. 3/4 of them still believe that the stock market is still in a bear territory. They believe that the recent bounce of the S&P 500 to the bull territory is a very short-term market correction. Very soon the market sell-off will continue. Many of these investors are readjusting their portfolios to capitalize on another wave of market decline. At the moment, many investors are dumping corporate bonds. They're jumping onto the stock market. This is in confluence with another group of economists who had earlier pointed out the market can crash by up to 40%. Early April, the U.S. stocks rebounded from a big sell-off in March, where most of the major U.S. indexes plunged into the bear territory at the fastest pace for the first time since 1933. This is because investors panicked, especially after the economy was closed. Most of the big money investors are expecting that the S&P 500 will remain below 2,500 the bigger part of this year. This means that the smart money is very pessimistic about the stock market this year. On top of the closure of the economy, we also have other factors that will contribute to a further market collapse in 2020. You may remember that we have a very big trade war between the United States and China. This is also heavily influencing the market behavior. At the same time, we have a very tense political environment with the U.S. presidential elections coming in the last quarter of the year. Because of this, many investors are expecting a lot of chaos in the market. UBS Wealth Management has reported that about 44% of the investors have been expected an unusual year in the market even before this outbreak. We have many factors that could have contributed to an economic downturn in the United States, but the recent global disruption has accelerated everything. Even if the economy will open up again later in the year, we have many factors that will affect the stock market. To the investment community, this year we have a roller coaster in the stock market. The future is extremely uncertain because we have multiple factors that will affect the markets. And just as it is tough for investors in the beginning of the year, it'll be difficult to predict the market. Many investors are reducing their exposure in the market because at the moment the future is very unpredictable. We have a huge public health challenge. Because of this, the economy might remain closed for months if things don't change. Many investment banks have already lowered their end-of-year targets as a result of this economic disruption that's caused unprecedented panic in the financial markets. Investment banks and hedge funds are preparing themselves for a tough year. Many economic analysts are pointing out that this will be a very tough economic year. Millions of Americans will have no jobs. Many companies will go bankrupt. Investors are expecting poor returns from the markets. To most of the investors out there, this will be the worst year in a decade. The market has collapsed. Many people have lost their fortunes. This will only get worse if the economy remains closed. This time around, both the Wall Street and Main Street are suffering because of this historic economic fallout. Everyone is being bailed out by the government. Big companies and households are depending on the government for their survival in these perilous economic times. In the coming weeks, most economists and investors are expecting things to get worse in the stock market because unless the economy opens up, we will have a second phase of stock market collapse. Things will become worse before we see any signs of recovery in the markets. This crisis will become bigger and bigger as long as the U.S. economy remains closed. Companies that have halted their operations are already losing billions of dollars in revenue. It'll be difficult for most of the companies to recover even with the government stimulus package. Many of the companies you know will go bankrupt. They will have to be bailed out with the American taxpayers' money. This will not be a quick market recovery as some people think. It'll take a lot of time for the markets to stabilize and for the economy to be fully operational again. If you want to invest in the stock market, this might not be the right time because the market has not yet hit the bottom. Everything is pointing out that the market will continue falling in the near future because it'll take time for the economy to open up. This is the most dramatic market crash in recent history. Without any doubt, it'll take years for the economy to fully recover. This is the economic meltdown of the decade. There is the possibility that things will get worse. There is more pain to come. So you'd better brace yourself for tough economic times ahead.